Today is the 8th of December 2016. Now, in no particular order, I'm just going to go through a few articles which I think are relevant today and also cross-reference back to a few videos that I've done in the past. And the first one, which is this Tata Steel, which is a UK steel production plant, which is having extreme difficulties at the beginning of the year, has come out today that they're agreeing to save 8,000 jobs inside the UK. Goes on to say, Port Talbot plant would remain open under rescue plan that could still be sunk if workers reject pensions overhaul. And this is what the whole deal revolves around. The proposals, however, also involve Tata Steel shutting UK final salary pension scheme. Tata Steel and trade union leaders have agreed a deal to save 8,000 jobs in the steel industry and the Port Talbot Steelworks in South Wales. The jobs have been a risk since March, when Tata Steel announced it was putting its UK business up for sale amid losses of more than £1 million per day. The Indian company is yet to confirm how it will fund their existing benefits, with the scheme at risk of entering the Pension Protection Fund, which would result in a 10% cut to members' benefits. The British Steel Pension Scheme, BSPS, has liabilities of more than £15 billion and 130 members. So it's clear to see that in order to save these current 8,000 jobs, Tata Steel are telling the workers that they have to take a cut on their pensions. And it goes without saying, the people that have already paid in for decades into this pension scheme will be less than happy and will obviously be voting no. They want their pensions to remain. So although it sounds like a deal was being struck, I think it's highly unlikely that this is going to go ahead. So we'll leave that one there until further news comes out. Now moving again on with The Guardian. This article, which is Wednesday the 30th of November. Stephen Mnuchin nominated for US Treasury Secretary. Donald Trump appoints ex-Goldman Sachs banker who says he will oversee the largest tax change since Reagan, and that's Ronald Reagan. Donald Trump has nominated Stephen Mnuchin, a Goldman Sachs banker turned Hollywood financier with no government expertise, as US Treasury Secretary. And it's just amazing how these people with no experience but links to Goldman Sachs always end up in high power positions inside of governments globally. Mnuchin, a multimillionaire who was dubbed a quote foreclosure king end quote for buying up distressed mortgages and evicting thousands of homeowners during the financial crisis. So guys, doesn't that sound like a fantastically respectable guy to have running a government? Somebody who kicks thousands of people out of their homes in order to make profit. Give them the keys to the kingdom and see what happens. Mnuchin said, quote, taxes are way too complicated, end quote, and people spend, quote, way too much time worrying about ways to get them lower, end quote. He claimed that the proposed tax cuts would allow the US economy to achieve an annual growth rate of 3% to 4%. Independent experts have said Trump's proposed tax changes will hugely benefit the super rich, while having little benefit, if any, for the up to 8 million of the poorest families in the US. And that's what happens when these guys take office. They don't give a damn about the small guy, and they only fiddle the books to make it work for their elite buddies. Same shit, different day. Again with The Guardian, 7th of December. Some fresh ideas to tackle social insecurity. And here's the man from the UK, Mr. Mark Carnage Carney, back again in the headlines. Mark Carney can himself do far more to bring about his desire for rebalancing of the economy to help the, quote, the left benefit, end quote. Globalization victims must now get a share of the gains, warns Carney, 6th of December. In August, the Bank of England announced a further £60 billion of its quantitative easing programme, taking the total of e-printing money to £435 billion. the equivalent of nearly £7,000 for every man, woman and child in the country. And it goes without saying, where is the logic if a 60 billion quantitative easing doesn't work and you just have to keep throwing money at a fire? At which point does the actual general public realise, hang on, this just isn't working? But the problem is, people just don't give a damn. The general public have no idea what all these billions and trillions actually represent. It's debt on their heads. And these guys, again, a Goldman Sachs man, is just laughing in the background, rinsing the countries dry, creating a super wealthy elite class through the systems. Instead of using this staggering amount of money to prop up banks and inflate stock markets, property and other assets, the new £60 billion of quantitative easing should be used to buy bonds from a national investment bank and from local authorities to generate a, quote, jobs in every constituency, end quote, program. They would give all people, not just the left behind, a sense of hope about their economic future and should involve decentralized infrastructure projects centered on a decades-long multi-skilled program of energy refits of all the nation's 30 million dwellings, a shift to localized renewable energy and a rebuilding of local transport, food and flood defense systems. So it sounds very similar to what Trump's proposing to do. Flood the economy with huge amounts of effective quantitative easing or borrowing from the banking systems to facilitate the false impression of recovery, of there's nothing going on here, guys, there's no disaster, because we're just flooding the market with money, with fiat currencies, which has the effect of diluting every single pound, dollar, euro, yuan in circulation. When these guys flood the markets, the purchasing power gets flushed down the toilet. So while it may look like it's good in the immediate term, all it is an injection of heroin into the system to sustain it for just that little bit longer on its high. You cannot avoid a critical collapse to reset the market back to natural levels because of this super artificial stimulated economy that we live in. Is nothing more than a design by these elitists to control and grab wealth on a scale never seen before, because what actually is occurring is by devaluing everybody's money and hyperinflating billions and trillions into the stimulated economies, the only people benefiting are those on the top tier, because it's like riding a wave, a huge tsunami wave into the coast. All the banking elites are on their surfboards riding that wave and enjoying every single moment, whereas everybody else are the ones that are going to be trashed by that wave or left in the distance miles behind it. That is what the erosion of fiat currency is doing globally to every single man and woman, while they are racking up debt upon every single person globally, nation by nation, while having their currency wars. It really is quite a dire situation. So moving on to this next article, which is Cointelegraph. Now obviously I don't cover a lot of this crypto news, but I found it relevant because obviously it links into the India situation, which, as you will see shortly with a couple of other articles, it then ties back into the gold scenario as well. So let me just briefly update you with this one as well. And this is December the 1st. India's Unocoin launches new Bitcoin all-in-one app, capitalizes on demonetization. Unocoin, one of India's foremost Bitcoin companies, has launched a new mobile application for both iOS and Android platforms. The new application has been developed by Unocoin themselves and will allow Unocoin customers to buy, sell, receive, as well as store Bitcoin in one place. Bear with me here, guys. Do not store any of your Bitcoin on any marketplace network, because these are the places with high concentration of Bitcoins that ultimately get hacked. So remove your Bitcoins into another form of storage. Carrying on. Interestingly, the application makes its way to users as Indians are trying to grapple with the demonetization of the 500 and 1,000 banknotes by the government of India. Bitcoin has hit new highs in the domestic Indian markets since decentralization occurred in the midnight of November the 8th. It goes on to say, however, in India, one of the greatest challenges is the diversity of the country itself. Although India boasts the world's second largest English-speaking population, with roughly 125 million people having some degree of English proficiency, it is still only 10% of the billion-plus population of the country. But guys, that's still 120 million people that speak perfect English. I mean, again, it breaks down because obviously the internet isn't available to everyone, but this is a large market cap that the Bitcoin entrepreneurs are tapping into. Sunny Ray, co-founder and president of UnoCoin, talks about these challenges. He says, quote, "We've already started building instructional videos in over 10 languages to help such issues. In the future, we plan to cater even more languages." Young professionals in UnoCoin's crosshairs. UnoCoin is going after those people who already use one or the other set of financial services. In a press release made available to Cointelegraph through email, co-founder and CMO of UnoCoin expressed optimism about the number of mobile phone users in India. He writes, quote, "As of now, there are more than 1 billion Indians who use mobiles. More than 300 million use their phones regularly for accessing the internet. This trend is expected to grow up by 56% per year. We focused on creating a design and interface that provided a seamless user experience on mobile," end quote. So guys, you're just talking about 300 million people and a 56% year-on-year increase, which means the following year you're going to be close to 500 million people with internet access on their mobiles. So with a seamless transacting base that could potentially tap in to this Bitcoin market, should the Modi, the president or prime minister of India, decide he's going to follow through with this cashless society that he's aiming to get towards, then it goes without saying that Indians are going to be flooding quite likely into this Bitcoin market for on-the-street transactions in the digital sense, but also maintaining physical gold holdings. And this is 500 million people, potentially, which is 1/14 of the global population, which is quite a significant breakthrough. So you've got to think to yourself, well, what will happen to the actual value of Bitcoin? Not only in India, but China. You double that amount. So you're now talking about 1/7 of the population of the planet, quite likely trying to flood away from the fiat holdings into other forms of assets, other forms of transacting. So that is why you'll see the link through the Webbot reports stating the astronomical gains that should be expected through the Bitcoin and the gold and silver physical holdings, because it's a numbers thing. So moving on again to another related article published on the 8th of December 2016 by Frisco de Anconia. As businesses in India come to a halt, Bitcoin and Asia Digicoin profit from decentralization. I won't pronounce this section there, but it's ADCN explains how the ongoing decentralization of India helps Bitcoin and other digital currencies. Cointelegraph. Would you say that the recent demonetization in India is a step in the right direction? Well, for centralized currency, it is a great step and a temporary solution for a country like India, where we are facing a lot of problems like corruption, fake currency, black money, etc. The Indian economy needed such a step to clean and refresh from the whole currency mechanism. CT. Is the business community faring well from this initiative? AB. All businesses have been halted for the last 1 month as people have been busy exchanging the old currency, and this has impacted business very badly. This time is the wedding season in India, and all such businesses are facing lots of issues. The food industry, dairy industry, and all seasonal businesses will face big losses, I guess due to this decision. CT. How has it affected the ordinary Indian? AB. It has been both positive and negative. In the long term, it can be a positive step to flush out black money and unaccounted money and bring that balance in a society where the government can now plan programs for citizens according to the availability of currency supply in the markets. The Indian government is developing a lot of initiatives to create a cashless society and pushing all to make digital transactions. Being such a big country, this step was a shocker for many who are uneducated and do not have any access to the banking system because the old currency can be deposited only in banks and post offices. For them, it is a great challenge to cope with this action and become digital money users overnight. The limited supply of new cash has impacted businesses as well as 90% of the Indian society, as transactions are only happening in cash now. Moreover, the limits on withdrawal have chained the hands of the people from using their hard-earned money. CT. Has the situation made Indians turn to Bitcoin? AB. Yes. This has been an eye-opener for many who are learning but were skeptical about Bitcoin, Asia Digicoin, or other decentralized cryptocurrencies, and since then Bitcoin has been selling at a higher rate in India than on the international market. Now people are more open to understanding the concept and perceive cryptocurrency to be the better, safer, and more secure form of money to store their wealth. CT. Do you think the quest for a cashless society in India will succeed? AB. It's a very hard task to make India cashless overnight, but eventually I am sure people will adopt to the changing economy as Indians are quick learners. Our government is making efforts to help people learn how to make digital transactions. Power Hashing as a community is also very active in making people aware of the upcoming trend of cashless transactions with digital currencies, and have also been continuously conducting educational seminars. CT. Are Indians supportive of this rush policy? AB. It has been mixed response from society. People are not denying the problems faced, but most people support this decision. Standing in the lines at banks and ATMs is frustrating for them, but they hope in the long-term benefits. So what we can basically take from this one, guys, is a large portion of the working and middle-class Indians will likely be speculating into the Bitcoin market. So you have to ask yourself, what is that going to do to price realization of the Bitcoins? Moving on to this last related Bitcoin news, 6th of December by William Suberg, again by the Cointelegraph. Bitcoin purchases in Mexico grow as Trump's planned remittance block nears. Bitcoin could soon come to the rescue of millions of Mexicans if the Trump administration proposed crackdown on remittances becomes law. Digital currency exchanges in Mexico are thriving and ever-increasing trade is being witnessed. As early as May, the president-elect campaign signaled its intention to stop more than 6 million undocumented Mexicans in the US from sending money home. Informal economy for remittances. The remittance funds kept in the US, as Bloomberg points out, would be to be making Mexico pay for Trump's long-touted border wall. Quote, I would risk stuffing money in hidden places because we have no choice, end quote, one Mexican immigrant told the publication. In the future, it is feared Trump's government will make it illegal for remittance firms to serve Mexicans who cannot prove they are legally registered in the US. Uncertainty about Trump's next move is driving what is already a thriving black market for wealth transfer between the two economies. Goods are commonly transported on regular flights for a huge fee, and regular crackdowns on money exchange firms could quickly and dramatically increase such practices. The move, quote, would stimulate an informal economy for remittances, end quote. Bitcoin exchanges ride wave of enthusiasm. Bitcoin could thus emerge as an immediate solution to the crisis. Digital currency use is hardly scarce in Mexico, with exchanges thriving and ever-increasing trade being witnessed. November the 8th, quote, was our highest volume day historically, with about $13.5 million in purchases, end quote. Pablo Gonzalez, CEO of local exchange Bitso, told Payment Source last week. He suspects the rush was due to, quote, panic, end quote, as the value of Mexico's currency dropped by over 12% upon news that Trump had won the presidency. Meanwhile, Bitcoin investment in Mexico is no different from the enthusiasm being seen further south, for example, in many Latin American countries. For instance, Bitso secured a $2.5 million investment in January, tellingly enough from the US-based Digital Currency Corp as well as domestic supporters. The investment round marked the first time a Mexican financial institution had invested in the Bitcoin space. Quote, I feel this round has paved the way for local banks to join the club, end quote, Gonzalez said at the time. So guys, this is now becoming not just a huge China buying epidemic, but also starting to trickle into India and now into Mexico. So you can see that this is now becoming a global spread of people not only investing big money in setting up ways for the general public to acquire this in their nations, but also that people are becoming more educated and seeing that fiat currencies are not the way to be holding your wealth because of the erosion effect that these banking cartels are creating globally. So we'll leave that one there and we'll move over to gatter.org. And this was published 7th of December by CPO Well. And guys, I don't have the entire article because it's the times.co.uk and you've got to pay for this service. So it's just a short sum up of what has occurred inside the UK by Philip Aldrich, The Times, London. Britain's trade deficit with the rest of the world is £6 billion larger than previously thought, and at a record high because the nation's bean counters made a mistake in their sums. And that's always something that we see occurring. The numbers are always fiddled to benefit whatever the agenda is, and then always revised months later and are horrifically underaccounted. It goes on to say, the Office for National Statistics yesterday admitted to a big, quote, processing error, end quote, that meant it had miscalculated the value of everything that the country exports and imports for almost 2 years. For the 3 months to September, the correction catapulted the trade deficit from £11 billion to £17 billion, the worst since records began in 1955. The error comes at a particular sensitive time for the ONS, and the trade series in particular, which is being watched closely for signs of an export revival after the fall in sterling since the Brexit. The Bank of England and the Office for Budget Responsibility expect an improvement in the UK's trade to cushion the economic blow of voting to leave the European Union. However, the ONS's mistake appears to have masked the catastrophic collapse since June. The problem was found in the collection of, quote, non-monetary gold, end quote, data, which measures the amount of gold traded privately rather than used in jewellery. For every other quarter from the start of 2015, the corrected numbers improve the trade picture, supporting that UK investors have been net sellers of gold. Since Brexit, the data shows that they have become large importers of the dollar-denominated asset in an apparent flight to safety. And what I will presume that the rest of the article goes on to say is that this information that UK is supposedly selling gold and buying dollars is actually 100% incorrect. And we're actually selling currencies and purchasing large quantities of gold. And that is private individuals. Now obviously they have fiddled the books to make it appear otherwise. Because if people are acquiring large, physical, private gold holdings, it means there's something seriously wrong with the economy, and that doesn't look good for the books. So again, another article regarding cooking the books. Another article here from Bullion Star Blogs. Koos Jansen, 7th December. Gold in London and Hong Kong is used to settle Comex futures. This post is a sequel to understanding GOFO and the gold wholesale market, and Comex gold futures can be settled directly with eligible inventory, in which exchange for physical EFP trading is explained and how it can increase or decrease upon interest at the Comex. If you're new to this subject, it's advised to first read my previous posts. Most gold analysts summarize Comex 100-ounce gold future contracts, GC, can only be physically settled through taking and making delivery. This is technically true when excluding the possibility of EFP trading in GC through the over-the-counter OTC market. While an exchange trading in GC is, quote, executed openly and competitively, end quote, trading GC in the over-the-counter realm, and thus the price of the gold, its form and location, is a, quote, privately negotiated transaction, end quote, between buyer and seller. The Comex is a subsidiary of CME Group, which offers its clients over-the-counter trading on a platform called Clearport. Because the Comex in New York is the most liquid gold futures exchange globally, offering precious metal futures denominated in the world's most used currencies, the US dollar, gold industry participants use GC for a variety of reasons, including hedging metals held outside the contract's deliverable geography. Subsequently, the contracts can be physically settled anywhere at any price through EFP. In EFP, two parties sign a futures contract, short and long, and simultaneously execute a reverse spot transaction, buy and sell. One side sells short the futures contracts and buys spot gold. The spot leg is referred to as the related position by CME, while the other buys long the futures contract and sells the related position. EFP trading can increase the open interest, decrease the open interest, or not change it, dependent on the existing position held by both parties before they enter into the EFP transaction. When EFP decreases the open interest, the phrase, quote, settle position, end quote, is applicable. Another way of saying it would be, quote, offsetting positions, end quote, or netting out positions. Let us take a look at a real-life example. The next picture was sent to me by data wrangler and gold specialist Nick Lard. It's taken from the book The Prospect for Gold, The View of the Year 2000 by Timothy Green. In the excerpt, the author describes how the Russians sold their gold in Switzerland during the 80s. The phrase sums up Russian gold operations for the last generation. In the gold market, they'd howl like the wolves. They are good capitalists. Analysts sometimes suggest that Russians dump gold. Why should they? It is a key foreign exchange earner, and they always seek the best price. The Bank for Foreign Trade in Moscow, which handles gold operations, has become an astute trader using forward sales, futures and options. They will sell on the Comex in New York and undo with EFPs, exchange for physicals in Zurich. The bank will not often only stay away for a weak market, but buy back to support a falling one. They are an integral part of the international gold scene. As major gold producers, it is just as natural for the Soviet Union to sell gold as it is for South Africa. They must always be viewed in that light. This example matches my previous one regarding EFP, hedging metal held outside the contract's deliverable geography. Any bullion bank, miner or refiner can sell short on Comex, and when the gold needs to be physically, quote, settled, end quote, for example, in Switzerland, the short position can be unwound through EFP. The only requirement is that, quote, the quantity of the related position component must be approximately equivalent to the quantity of the exchange component, end quote, meaning the spot leg must be more or less 100 ounces of gold, which is the underlying asset of GC. In this example, the GC short holder connects through CME Clearport to exchange for physical. In the EFP transaction, he will buy long a futures contract and simultaneously sell spot. His long and short will then be netted out while he sells spot, the physical in Switzerland. Effectively, a Comex short has been physically settled outside the contract's deliverable geography. Naturally, a long position can also be unwound in Switzerland, which is then the other side of the trade. EFP moves kilo bars through CME's Hong Kong vaults. In March 2015, CME launched a gold kilo futures contract, GCK, physically deliverable in Hong Kong. But ever since implementing, there has been poor participation in this instrument. From the start, GCK trading volume has been close to nothing and deliveries rarely occur. Notwithstanding, there are massive volumes of kilobar gold flowing through the CME approved warehouses in Hong Kong, owned by Brinks Incorporated. On average, 3.9 tons per day are withdrawn from this vault, but sometimes daily withdrawals are as high as 20 tons. And then here's the graph of the CME gold kilo Hong Kong data of transactions on a day-to-day basis. And obviously the highest reading will be around the 22,000 kilos. Because volume and delivery for GCK on exchange is so low, the withdrawals must be explained by OTC trades. A CME representative actually confirmed this to me. The physical movement through the Hong Kong vaults is caused by EFP transactions. But if we look at the GCK volume page, we can never observe any EFP trades being disclosed. In contrast, EFP volume and GC is substantial. Can it be gold kilobars in CME's approved warehouses in Hong Kong are used to settle the 100-ounce future contracts? Yes. The underlying asset of GC is, quote, either 100 troy ounce bar or 3 1 kilo bars with a weight tolerance of 5%, either higher or lower, assaying to a minimum of 995 finesse, end quote. The underlying asset of GCK is, quote, 1 kilogram bar, 32.15 troy ounces, and shall assay to the minimum of 4 nines fine, end quote. It's thus within the indicated confinements on EFP trading that the 100-ounce gold future contracts is physically settled with 3 kilogram bars in Hong Kong. My theory is that kilo bars bought by bullion banks in the West, for example at Swiss refineries, to be consigned to China are hedged on the Comex, and once the gold arrives in Hong Kong, the shorts are unwound through EFP. From there, the gold is transported by armoured truck to Shanghai Gold Exchange, designated warehouses in the Shangjing by Brinks that has a cross-border logistics license from the Chinese government. Supportive to my theory, see Exhibit 3 below. Notice the strong correlation between, quote, gold import into Hong Kong versus kilobars received in CME's vaults, end quote, and, quote, re-export from Hong Kong versus kilobars withdrawn from CME's vaults, end quote. So here we have, guys, the Hong Kong monthly gold trade versus CME Hong Kong kilobar vault activity. So the green bar is representing the gold imported. The light blue is gold re-exported, excluding China, and the dark blue is gold re-exported to China. The red line is representing the CME kilobars withdrawn, and the purple line at the top is the CME kilobars received. And you can see obviously the correlation is almost identical on everything. Let's see what he says. The correlation points out most gold moving through Hong Kong, which is headed for China, is in kilobar form and moves through CME's vaults. And because most of this throughput is EFP related, I assume the kilobars are used to settle Comex futures. It is hard to test if my theory is accurate because EFP transactions are executed in the over-the-counter realm and little information is available. Surprise, surprise. If anyone has a different theory, please comment. So we leave that one there, guys, and there was a couple of other articles that I was interested, but I'll leave it there. I hope you enjoyed this video, so please do leave any comments if you have any, and I'll see you on the next video.